Today, the gold market experienced one of the sharpest shocks in recent decades. After a prolonged rise in gold and silver prices plummeted sharply following news from the United States. This became the main economic event of the day for commodity and safe haven markets. This is not just a local correction, but a movement that immediately affected global investors, funds, and currency markets. The reason is that President Donald Trump announced the nomination of Kevin Warsh for the position of chairman of the Federal Reserve. For the markets, this signaled a possible tightening of Fed policy. Kevin Warsh is considered an advocate of stricter inflation control and a cautious approach to lowering interest rates. This sharply changed investors' expectations, who had previously anticipated a more accommodative monetary policy, and the market's reaction was immediate and, I would even say, very severe. Gold lost about 12% in a single trading day, which was the strongest and most abrupt drop since the beginning of 1980. Silver came under even more intense pressure, with the drop reaching up to 35%. All of this indicates that the market was overloaded with long positions and was unprepared for such a sudden shift in expectations. Why did this hit gold in particular? The appointment of the new Fed chairman led to a strengthening of the US dollar, and gold is traditionally inversely correlated with the dollar. The stronger the dollar, the less attractive gold becomes as a non-yielding safe haven asset. It's important to emphasize, this is not a typical pullback, but a large-scale correction following record growth. Just a few days before the sell-off, gold had reached new all-time highs, the market was overheated, and any major news event could have triggered profit-taking. In fact, we saw a simultaneous exit from positions by hedge funds, investors, and speculators, which intensified the decline. The effect was felt not only on exchanges but also in real markets. In a number of countries, there has already been a sharp drop in prices for physical gold, for bars, coins, and jewelry items. They immediately dropped in price by the end of the day. This indicates that the movement is global in nature and affects not only financial instruments, but also real demand. According to experts, the market is going through a phase of reassessment after a period of rapid growth. Fundamental factors such as geopolitical risks, the growth of global debt, and economic instability continue to support interest in gold in the long term. A shift in expectations regarding the Federal Reserve, the strengthening of the dollar, and widespread profit-taking triggered a sharp sell-off, but this does not mean that gold has lost its status as a safe haven asset. Rather, the market has entered a phase of high uncertainty, where gold once again becomes an indicator of confidence in the global financial system. In the short term, the outlook for the gold market is likely to remain volatile, and the sharp decline does not close the topic. On the contrary, it opens a phase of uncertainty. And investors are not rushing right now, they are waiting for confirmation regarding inflation, interest rates, and the actual actions of the Federal Reserve, not just the announced ones. If the dollar continues to strengthen and expectations of a tight monetary policy persist, gold will remain under pressure. In this scenario, the market may continue to digest what has happened for some time, but in the medium and long term, the situation looks different. The fundamental reasons that drove gold's growth have not disappeared. Global debt remains high, geopolitical risks persist, and economic uncertainty hasn't gone anywhere. It's just been temporarily pushed into the background. That's why gold is unlikely to lose its status as a safe haven asset. Most likely, the market is now shifting from a phase of excitement to a phase of more cautious, thoughtful evaluation. If you're interested in where to trade the precious metals market, I have selected brokers who are among the top in the market, and you'll find registration links for these brokers below in the description. Thank you all for watching. Subscribe to this channel. See you next time.